Assalamualaikum warahmatullahi wabarakatuh. My name is Afiqah Binti Mansor. My matric number 2019348151. So today I would like to present about the FinTech in Malaysia for my individual assignment for ISB547. So without wasting our time, let's move on to the video. Let's see what is FinTech. Financial technology, or a short form of FinTech, can be used to explain a new technology to improve and optimize financial services provision and use. FinTech is a combination of financial engineering. FinTech is mainly employed to assist companies, business, and consumers to be better in managing financial activity, processes, and life through the use of specialized computer software and algorithms and increasingly smartphones. Move on to why banks embark in FinTech. FinTech technology startups are the most talked about and most funded and have the same future which they are designed to represent a threat to challenge and ultimately take over by more flexible service, serving a poor segment and providing faster and better services to establish a traditional financial services provider. So, financing refers to the gaining of funds from various sorts of business activity. Therefore, there are a few reasons why banks embark into FinTech. First, big data. FinTech has the ability to destabilize financial intermediary and bank in particular by generating a new business model based on the use of big data. So, big data can be handled using advanced computer power using AI algorithm. This will enable continuous accessibility in the big data. So machine learning is an AI version which allows computer to learn without a specific program and means to attempt a deep learning using a layer of learning algorithm to derive significance from big data. Next, the reason is crowdfunding. FinTech development provides a numerous new alternatives to financing, as for instance, a funding channel beyond a traditional system. Crowdfunding provides a company with an alternative way to obtain a fund at a lower cost and not traditionally feasible. So crowdfunding is actually one of the most popular alternative finances. That reason is at a lower cost. The use of a new technique could lead to a lower financial intermediation cost and better product for consumer. For example, FinTech facilities can improve the creditworthiness of loan customer by screening them and improve the interface between the financial customer and their services provider. Peer-to-peer (P2P) is a credit platform provide a credit for private individual and businesses to invest in small business without intermediation. Those platforms correspond directly to borrower and lender. So some permit the lender to select the borrower. Other platforms are packages of loans. This platform often provide the company with risk ranking obtained through algorithm for the use of big data to screen data. Next is mobile-based payment scheme. Both bank and Visa and MasterCard still monopolize the transaction payment market, but often non-bank innovations like PayPal, Apple, or Google come. It should be mentioned that mobile payment scheme has a significant impact in countries where there is small share of people who hold a bank current account. The last one is robo-advisor, or a cheap alternative for human wealth consulting, completing a program which generates investment advice from customer information and use machine learning instruments. In addition, robo-advisor can prevent some of the usual disputes in the sector if they are properly programmed. Now, let's see the effect of FinTech in Malaysia. Firstly, differentiation. Differentiation has been seen as the best opportunity for 87% of Malaysian people responded from FinTech. In a competitive major financial services FS market like Malaysia, where debt growth is predicted to continue tender, this advantage is especially valued. Bank loan grew 5.6% year-on-year in June 2016 and were the slowest it grew in 9 years. So since FinTech isn't that old or new in Malaysia, there is a mover advantages in which FS and FinTech are able to differ strongly from the competitor. Second, lower cost. One of the areas in which our Malaysian respondents agree with their global partner is the chance to lower costs. New services such as SaaS solutions that foster the transition from physical channel to digital and mobile delivery are announced, increasing efficiency and cost reduction. So FinTech partnership can contribute to streamlining, improving and simplifying financial institution operation. In addition, financial institutions can also look forward to drawing advantages from cost reduction to the asset-light business model in which the FinTech firm operates. Next, big data and cloud technology. Without install special application on the unit, cloud technology provide a data access, allow banks to offer their product in any part of the world by centralizing network services. On the basis of analyzing the heterogeneous of rapid-moving digital information, the internet sort, corporate document achieve sensor reading, equipment, and many more. Big data provide customer with personal target offer. Next, API and Application Programming Interface. This program, for example, is integrated in Client Interaction System. An API is a compilation of classes, procedure, function structure, and constant for use in external software product through an application, service, or operation system. Moving on, let's see the example of FinTech company. There are a few examples of FinTech technology in our country Malaysia in many categories such as payment, e-wallet, currency exchange, blockchain, personal finance, crowdfunding, and many more. Moving on to the next point is FinTech initiative taken by the International Islamic Financial Institution. Islamic finance can escape for the FinTech revolution from its digital age. In order to survive, Muslim financial supplier must embrace FinTech. The name of the game is customer experience. Digital customer demand digital financial services and the gaps has been filled by FinTech. Although FinTech is still in its early stage and has a relatively small number of participants already penetrated Islamic finance space. First initiative taken by the International IFI is Crowdfunding Islamic. At the 6th Global Islamic Finance Award (GFAR) ceremony 2016 in September 2016, Atis Crowd was awarded the Best Islamic Crowdfunding Platform, while in 2015, Narwi was named Best Islamic FinTech for Microfinancing Award by the Al-Huda Center of Islamic Bank and Economics by Thomas Rutter and the Abu Dhabi Islamic Bank, as well as the Best Islamic Finance Award in 2016. Second initiative is Islamic Robo-Advisor. Wahid, the first automated World Islamic Investment Platform, has been launched by the New York-based Wahid Invest with the objective of providing 2 billion Muslims around the world access to halal portfolio. So Wahid is the world's first automated platform for ethical investment but offer less minimal investment. Wahid is the first global social economic demographic robo-consultant to be available. Third, increase Islamic market share. Islamic FinTech is predicted to increase the market share of Islamic finance by providing 6 financial services. Further fragmentation of Islamic finance assets into 6 different categories of financial services, including financing, trade financing, trust financing, wealth administration, and takaful. Next, Global Islamic FinTech Hub. Finocracy announced the first global Islamic FinTech Hub to serve as the focus of the rapidly growing Islamic FinTech space in the Future Finance 2030. The FinTech Center will be at CH9, an accelerator for companies that plan to improve the business ecosystem in the region of the GCC and Bahrain. Lastly, Islamic social finance also has a large potential. Every Muslim must help poor member of society with various charitable instruments, the greatest of these being is zakat, sadaqah and wakaf by means a Muslim of principle. So every person and every business must share the wealth with those who are less happy by giving zakat and be encouraged to volunteer through sadaqah. Let's move to the next point is FinTech initiative taken by the Islamic financial institution in Malaysia. Nowadays, numerous FinTech companies have already been established which help consumers to select and buy financial products such as bank loans, credit cards, and insurance via the comparison concept. In the past, user needs to go to financial institution or read their information to learn about the bank or insurance product. Now that the company and startup service exists, consumer can make a quick comparison and may even shop from financial institution for banking insurance product directly. So there are a few initiatives taken by the IFI Malaysia in FinTech technology. Firstly, investment account platform IAP was launched on 17 February 2016. Was a Malaysian first multilateral financial intermediation platform in the Islamic financial system. The IAP is the central marketplace of initial 150 million funds for a small and medium-sized enterprise SME, which is headed by a consortium of 6 Islamic banks from Malaysia. Second initiative is Islamic FinTech Alliance. On 1 April 2016, the Islamic FinTech Alliance in Kuala Lumpur, Malaysia was launched by 8 Islamic crowdfunding platform operators around the world. The members are Blossom Finance, Yasub, Itis Crowd, Narwi, Funding Lab, Capital Boost, Lens Good, and Scholar Funds. The founding members are 3 main objectives lie in the alliance, which is the first one, they want to promote security and confidence through the creation. Second, enlarge Shariah reach and social impact. And the third one, to support the development of sustainable global ecosystem. Third, crowdfunding for shariah-complying P2P. Epis Capital was awarded in November 2016 with the Securities Commission of Malaysia the first P2P Shariah-complying world license. So Epis Capital focused on financial small company and development project for real estate. Now let's see the challenges faced by the financial institution. Financial services companies today face many challenges. Most of these related to rapid technology changes. With the overwhelming majority of financial companies has embraced the technology revolution, these companies still face many challenges. So the first challenges is borrowing convenience can lead to debt being caught. Mobile P2P financing in compliance with the Sharia allows a financial inclusion by access unbanked population regardless of why customer will accept. So the relatively easy financing can however potentially help people to borrow more and build up excess debts. So the final result can only be enhanced debt-driven consumption instead of funding micro or small enterprises. Second challenges, it could be possible to develop a new method of fraud. The P2P financing facilitates credit approval on the basis of personal data and telephone number within a minute. In comparison to IFI financing, the charges are nevertheless considerably high. In addition, the financial aggressive reimbursement measures are used in the case of default. Unimaginable donor can contribute by crowdfunding for fake undertaking. So the fund may be used for unrelated reasons once collected. A faster collection of funds means a quicker collection of funds. Third, lack of financial infrastructure may lead to unbanked people. In US, Prospective customers can open bank or investment accounts simply by entering a certain personal data which is checked automatically for government records. If all of the data is correct and valid, the account of the customer will be opened almost instantly. In many developing countries, the absence of such financial infrastructure can make the opening account rather awkward and can dissuade many people. AI could lead customers to obtain products or services is not needed. Due to the lack of comprehensive AI emergence in the financial services sector, in which robo-advisory can be used in wealth management, for example, could potentially advise the wrong product or services due to the limitation of the algorithm. 5. Strict FinTech rule to curb growth. IFI should take into account the growing importance of FinTech and the potential threat posed by the cybercrime, terrorism, or money laundering, which are now being started by many governments. Complying with the additional regulation can cause a IFI who may not have the necessary knowledge of this matter costly and time-consuming. Number 6. Regulatory compliance. Financial service industry regulation continue to grow. Banks spend much of their revenue on ensuring that they meet the requirement. You must ensure that systems are in place to comply with changing regulation and industry standards. Next is competition overcoming. Competition is still robust in the sector of financial services. Consumer wants custom service. It's also called for easier access to more automated services. Organizations provide all these services will dominate their market share. Brand loyalty and identity are less important today for consumers. Continue to update technology is one of the challenges for financial firms because business growth is very important, but they need to spend money to update their technology in order to grow. So, financial services company must continue to invest in technology like robotics or other tools to increase efficiency and cut the cost of operational risk and compliance management among the workflow automation tools. Next, let's see the future of FinTech. The FinTech sector can look forward to many new ways and norms to govern the rules in 2021 and beyond in such digitally working environment. First, the new payment model is contactless payment. Taking a view of our COVID-19 situation, the social distancing of the virus was one of the methods of preventing the creation of contactless payment in the banking and payment system. So, cashless payment is the main emphasis. In order to allow instant payment in cash online, the industry is all set to integrate a high-tech payment apps and system. Second, digital demographic catering. In order to build up a new tech service and high-finding mobile application using Islamic finance user, expand for IFI should focus on digital bank and capital market rather than a brick-mortar industry. Next, architecture open banking. Islamic bank can adopt a open banking system so that FinTech can access banking platform directly and provide additional services. At the same time, FinTech can offer IFI services through the use of open apps technology as though they were its own. Lastly, the use of AI or data analysis. The acquisition of Islamic financial services should be further driven by the right customer base using data analysis and the improvement of user experience through AI. As for the conclusion, FinTech services are a service provided by the FinTech company and startup to enable customer engagement in finance matters. It stems from technological advancement in banking and also financial affairs. So, it still has a low level of consumer awareness of FinTech in our Malaysia. So given that FinTech is dominated only in Malaysia by FinTech payment application and also virtual wallets, and that many other FinTech services application are available on the market that can contribute to making a daily business easier. That's all from me. Thank you.